Hi, I'm Max Keiser, and this is the Keiser Report. I bet you're thinking about taking your shoe off right now and throwing it at somebody. Well, there's an index for that. Stacy Herbert?
You knew my first headline, the Shoe Throwers Index. This is from The Economist, and they're trying to come up with an index that will help them gauge where the next Jasmine-type revolution might happen. As you see from the chart, Yemen is the #1 location in the Middle East. Libya, #2. 3 is Egypt, which is kind of bizarre since they are in the middle of a revolution.
And where in the list is Saudi Arabia? Because I think they're really ripe to explode in civil unrest and revolution. I'd like to see a revolution in Saudi Arabia. Where is that one ranked?
Well, they're #8, but the shoe throwing has already started in Saudi Arabia, and it's coming from an unlikely place if you look at this next headline. Report, Saudis warned Obama not to humiliate Mubarak. So King Abdullah basically threw his shoe at Barack Obama on a telephone call on the 29th of January, where King Abdullah reportedly told President Obama not to humiliate Mubarak and warned that he would step in to bankroll Egypt if the U.S. withdrew its aid program worth $1.5 billion annually.
Yeah, well, bankroll Egypt with money he made from selling gasoline to Obama's constituency in the U.S.
Exactly, but the only reason why his family, his kingdom is able to be worth $1 trillion is because the U.S. military, Obama is the commander-in-chief of the U.S. military, they secure those oil rights for this elite group of 7,000 princes and princesses who defraud the rest of their population.
Yeah, he's obsequious. I don't know why. I mean, we thought it was just like a little bit of awkwardness where he bows in front of King Abdullah. Of course, why is he doing this? Now we know that Obama is really, court jester to King Abdullah.
Well, after this phone call that took place between Obama and King Abdullah, where King Abdullah threw his verbal shoe at Obama, the next headline reads, Saudi Arabia's King Abdullah passed away.
No.
This is from an Islamic paper. And apparently after the phone call, sources stated that King Abdullah was furious and then suffered a sudden heart attack. Doctors ran to his rescue, but were unable to save him. He was pronounced dead, but his death was not reported due to the sensitive conditions that exist in the region. The Saudi Arabian government will reject this claim, but the ball is in their court to prove he is alive.
No, it was just a little gas and oil.
But it could be, a planted headline that this is like, you throw too many shoes at us, King Abdullah, fake king. This is the headline that you will be reading. You're going to die of a sudden heart attack. It could be falling from a plane, from 30,000 feet in the air. Who knows? You're going to die some way.
What a stroppy little drama queen, that King Abdullah.
He's like that character in that TV show. I'm having a heart attack.
Like Fred Sanford from Sanford and Son. I'm coming, Elizabeth. That's King Abdullah.
So Saudi Arabia is #8 on this shoe throwing index, but this next headline from WikiLeaks might suggest it should be a little bit higher up. WikiLeaks cables, Saudi Arabia cannot pump enough oil to keep a lid on prices. A U.S. diplomat convinced by a Saudi expert that reserves of the world's biggest oil exporter have been overstated by nearly 40%, or by 300 billion barrels of oil.
Yeah, they're lying. They're lying about the oil on the ground. We've been saying that for years. They haven't audited, from the outside anyway, the oil production. All the big major fields are in rapid decline. Saudi Arabia, Gawar, is saying, oh no, we don't have any problems. So OPEC is effectively dead. They cannot lower the price of oil anymore by flooding the market with oil, because they've hit peak oil, 2007, global peak oil. So now that whole foundation of power for Saudi Arabia is being taken away from the big sheikdoms and all the princes, and there are thousands of these frickin' princes all over the world. They pay billions to keep these guys rolling around in their Rolls Royces. For what? So that they can sell overpriced gas to American SUV drivers? Well, that's all over with. You got to get real jobs now. Guys, I suggest you apply down at your local McDonald's.
Well, this information transmitted in this WikiLeaks cable took place in November 2007 when Saad al-Husseini, a geologist and former head of exploration at the Saudi oil monopoly Aramco, He met with a U.S. diplomat. So this was during the Bush administration. Remember when Dick Cheney kept on flying over there to Saudi Arabia. And Sadat al-Husseini told them that Aramco's 12.5 million barrel a day capacity needed to keep a lid on prices could not be reached.
Yeah, they don't have the oil to pump. Now, this is going to be interesting going forward because America doesn't have the money to buy higher priced oil. China, however, does because China has all of America's money. They've got $3 trillion in reserves, so they can afford to pay up for oil and gas. The U.S., however, cannot. So this is part of the dynamics. And of course, the Saudis, who have been America's good buddy friend for years, will start, entertaining Hu Jintao more often. And Obama and the whole White House gang will be in the short bus trying to make their way down to the coast for a little R&R because they're freaking unemployed.
Well, I have another chart here to show you that the U.S. is not looking for a solution to this problem of Saudi Arabia running out of oil. R&D spending as share of sales. So this is for the U.S. corporations. And you see over on the left of this chart, the pharmaceuticals spends 18.7%. All the way on the right, down at the very bottom, energy spends less than 0.3% on research and development. And this includes research into conventional fuels such as ultra-deep water drilling and new oil refining techniques. So they're not looking for any other solution for our energy crisis coming up.
No, because there is no more oil to find. There's no more big fields to find. And they can find some oil trapped under 4 or 5 miles of rock and salt in the middle of an ocean somewhere. But the cost of taking it out is exorbitant and completely impractical. Or the tar sands in Canada, it's completely impractical. There's no price point that makes sense to take oil out of the tar sands of Canada. It costs more energy to get that oil out than you can energy burning it once you've gotten it out. So the whole dynamics of fossil fuel burning is finished. The entire globe runs on fossil fuel. And therefore, the peak credit that we saw in 2007, combined with peak oil that also occurred in 2007, mean that we've hit peak globalization, which means that populations around the world, whether it's Cairo, Tunis, Athens, Dublin, America, London, everyone's revolting because we've gone from a positive sum game of a fiat currency to a negative sum game of a lack of currency.
And so you see in the Middle East, all these dictators are fleeing with the wealth of the nation. They're already taking it out while these revolutions and shoe-throwing revolutions are building. But let's look over into the West and see where we're seeing the same thing in Egypt. So Omar Suleiman is another dictator in waiting for Mubarak. Here in the West, we have our financial dictators. And look at these headlines. Senior Lib Dem sacked for criticizing controversial deal for bankers. So this is a weird banking deal that George Osborne and the Tory and Lib Dem coalition created, Project Merlin. And under the deal with the industry, the heads of the taxpayer-backed high street banks will receive multi-million pound pay and bonus packages for last year. The chancellor said it was time to move from retribution to recovery and agreed to water down laws which would have identified multi-million pound bank traders. However, under the terms of the Project Merlin, the country's main high street banks have agreed to increase lending and provide funding for community projects in return for the government not vetoing their bonus programs.
Well, it's a classic hostage situation. The banks have the UK government hostage for ransom. The UK government has negotiated and appeased with terrorists. There's a two-tier strategy. They call terrorists fundamentalist, radical psychopaths who bomb buses or take down buildings. They won't talk to them. But when Barclays or HSBC or HBOS or Royal Bank of Scotland or Allied Irish Bank in Ireland, when they come into the government and talk with these people, they serve them tea. And they're worse terrorists. They kill more people and they have more casualties. I mean, we're talking about Sean Fitzpatrick, Anglo-Irish Bank, for example. He's up there with the worst terrorists of the last 100 years. You'd have to put him up there with Hitler and Mao and Stalin, Sean Fitzpatrick.
Max, you speak of the Irish bankers. They're in my final headline here. Ireland's Lenihan wants senior bank debt discounts. So Irish Finance Minister Brian Lenihan said the government is pressing for a substantial discount on 20 billion euros of unsecured senior bank bonds, a push that is being resisted by the European Central Bank. Jean-Claude Trichet, president of the ECB, said that Ireland needs to press ahead with its fiscal austerity, and imposing haircuts on investors is not part of the plan.
Right. The bond investors are to be made whole for committing acts of financial terrorism. The Irish government is in the pocket of the financial terrorists. I mean, imagine during the days of the IRA, for example, if Margaret Thatcher came out and was caught in bed with Bobby Sands. I mean, that would have been a scandal, right? Here you have the government of Ireland in bed with the bankers who committed these atrocious, these egregious acts of mayhem and wickedness. And they're all sitting around smoking a cigarette, having had a lolly-law good time, totally destroying the economy. It's unbelievable.
But the other thing is important to connect this to the Middle East, what's going on there. Democracy is not an option. The rulers of the world will not allow democracy there if they have their way. The same thing in the West. They will not allow capitalism to happen to the elite in the West. The same that they will not allow democracy to happen to the oligarchs of the Middle East. So you see that in Jean-Claude Trichet's statement there, that haircuts on investors isn't part of the plan. It is not part of the plan ever for the West. We will not allow bankers to suffer from capitalism.
Right. Capitalism would have both rewards and risks. And their version of capitalism is all reward for a few and no risk for a few, as all the rest of the society absorbs all of the risk. It's a kakistocracy in Ireland, ruled by the least qualified. The prefix, of course, caca, from the Latin and French merde. All right, so Stacy Herbert, thanks so much for being once again with us here on the Keiser Report.
Thank you, Max.
Don't go away, because when we come back, there's plenty more coming your way. Welcome back to the Keiser Report. Time now to go back to New York City and talk with Barry Ritholtz, money manager, author of Bailout Nation, and the man behind the extremely popular website, Ritholtz.com, also called The Big Picture. Barry Ritholtz, welcome back to the Keiser Report.
Thanks for having me, Max. It's always a pleasure to come by.
All right, let's start with what you wrote in the Washington Post recently. It says, why politics and investments don't mix. Talk to us about this.
I'm talking about economists and fund managers and traders who all allow their partisan political bias to affect their investing, and it turns out this operates for the worse. The two examples I used in 2003, after the Bush massive unfunded tax cuts, at the same time they were taking place, Greenspan had taken rates down to 1%, and all my pals on the left had said, this is going to be a giveaway to the rich, it's not going to create jobs, it's a budget buster, and all those things are true, but it's sort of like a surgeon going into the operating theater. You have to, hold all your biases to the side and be completely objective. If you look at the market back then, it was pretty clear this was an overwhelming amount of liquidity, and it was going to goose the market. The other side of that was 6 years later, March 09, Congress had waived the FASB 157 rules, which allowed banks at that point to then hide losses. They didn't have to report mark-to-market loans anymore. You had the market as oversold as it's ever been. The Fed had taken rates down to 0%. On average, when you see a down 55% market in such a short period of time, tends to mean that there's a big snapback rally coming. And when we discuss this with our colleagues and traders and friends, the guys on the right this time said, well, that Obama's he's a Muslim, he's a socialist, he's born in Kenya, he's going to destroy the market. In fact, the day of the market low, Michael Boskin had an editorial out in the Wall Street Journal saying Obama's going to absolutely destroy this market over the next couple of years. And as we know, the market's up almost 100% since then. So the idea was to tell people, hey, whatever your partisan politics might be, leave it in the voting booth. When it comes to voting, you have to think more objectively.
All right, well, this brings up the subject of self-interest and how this plays out in the markets. But my question to you, Barry, is that when you have a market, like we do in the States, that is dominated by exchanges that are increasingly becoming questioned in terms of their integrity themselves. The very market-making integrity of the free market capitalist system is coming under attack as people are questioning things like high-frequency trading, program trading, market manipulation. And so what about the market itself, Barry? It seems to be completely corrupt in that there is no price discovery anymore. It's all manipulation at this point. What about this, Barry? How are we going to solve this problem?
When you say the market's integrity is questioned, I disagree with you. I don't think there's any question at all. The markets were once nonprofit organizations run for the benefit of investors and the people that work there and actually traded there. And now it's a for-profit operation that basically is willing to sell their souls out to the highest bidder. So all these co-located servers that hedge funds are putting at the exchanges in order to get a millisecond advantage over everybody else, it gives them the ability to sniff orders before they go to the market, allows them to front-run investors. These guys are literally pulling billions and billions of dollars out, and that profit doesn't come out of thin air. That profit comes from the actual investing public who is forced to... We have a fire alarm. The actual investing public is actually...
Keep going!
These people are stealing money from the investing public, and it's really a great tragedy. Blame Dick Grasso for causing this whole thing.
Barry, you're contradicting yourself. You started off by saying, we have no problem with these markets. Then you described to me a way of front-running on high-frequency trading that's stealing. So which is it? Are the markets corrupt?
Max, I'm not saying we have no problem. I'm saying you raised that as a question. I said it's beyond any doubt. There is no question. The markets have been corrupted. This is not an issue for debate. This is, the world isn't flat. Once they went to become for-profit entities, all bets were off, and the investor was thrown under the bus. So you and I are completely in agreement about this. I'm just saying this isn't a debate. There is no question the markets have corrupted themselves.
Let's move on to, we talked a little bit about earlier. I've just looked at the piece myself. You can fill me in on the details. What is going on with the bank dividends issue? Can you give us the broad strokes here and tell us what your thoughts are?
I'm astonished that given how subsidized the banks currently are and how much they're a notch away from life support, I'm amazed that anyone has the colossal cojones, for a lack of a better word, to say, hey, we should let the banks start issuing dividends. When you look at their actual state currently, they're artificially propped up in the United States with 0% interest rates. They were rescued from the brink of disaster with emergency taxpayer loans. We've allowed them to hide their losses, so what looks like profitable companies are in reality either insolvent or pretty close to insolvent. We've allowed the banks to turn the GSEs, Fannie and Freddie, into their dumping ground for bad mortgages. All the big banks and some of the mid-sized banks are taking mortgages that should be discounted 30, 40, 50% or more, and they're selling them for near par to Fannie and Freddie. So they're taking bad loans and dumping them off on the public. It's a classic example of privatized gains and socialized losses. Then you take the artificially steepened yield curve. It's hard for anyone with a straight face to say, yeah, these banks are in great financial health. They're standing on their own. There's no government subsidy. There's no taxpayer support. Let's allow them to write big dividends. The whole conceit is just based on a fantasy. These banks, in my opinion, should have been put through a prepackaged bankruptcy, should have come out of the bankruptcy with the bad debt sold off for pennies on the dollar, with taxpayers owning the bulk of them, and eventually spun out, recapitalized, and in better health. But we didn't go that route. We're allowing them to slowly recapitalize by borrowing from the Fed at 0 and lending to the Treasury at 3.5%. and that process is probably halfway through. To even suggest that a dividend is appropriate at this time, I don't know what the hell's in the water where some of these people are coming up with this stuff, but it's the height of absurdity.
Right, so the government's subsidizing the banks who say we now want to pay a dividend for our shareholders, where the government could just use their influence to raise interest rates to give people a genuine return on their savings in a government bond. So they're forcing people to buy the stock of a bank that's been proven to be malicious to get any kind of a return on a dividend payout. And these are banks that are taking money from the government, when the government and the Fed could simply just raise rates and give people a genuine rate on their government bond. So it's a very circuitous way to get people to get any kind of rate of return on their savings by participating in the wholesale thieving, as you point out in your book Bailout Nation and in other books. So once again, it seems like the banks have a gun to the head of policymakers in Washington.
I don't even think they have a gun to their head. That would involve something much more sophisticated. This is simply, you pay your dime, you take your ride on the wheel. We're not a democracy in the United States, at least not the way we used to be. We're now a corporatocracy, and Congress has been thoroughly rented and is now owned by the major banks in the United States and the big Wall Street houses. When you look at the vast amount of lobbying dollars that are spent and the massive campaign contributions, the whole concept of government for the people, by the people, one man, one vote, that's a quaint, ancient notion here in the United States. We are now a government, a representative government that is sold to the highest bidder.
Right, but this gun-to-head aspect, it seems that anytime Congress balks at a request from the banks, suddenly there's a crash. We saw this with the Hank Paulson in 2008. We've seen it tied to legislation and some flash crashes that have occurred since then. But if you've got the ability through high-frequency trading and algorithmic trading to direct the market one way or another, if you're trying to coerce the government to do a certain policy and you can crash the market to make your point, that's in a way a financial gun to the head. But you wrote something recently, Barry, about I guess a friend of yours or an associate wrote his take on the current state of climate change, global warming, how this affects investment, and the grown-up version of what's really happening and how we should kind of begin to take this on board in terms of how it affects investing and the future of finance going forward. And of course, your comment boards were flooded with lots and lots of folks who fit into what I call the climate change denial camp. So talk to me a little bit about what you see going forward in this theme, and why is there such resistance by the general public who is experiencing the crazy weather every single day? Why can't they put the pieces together and understand that there's global warming going on and this is causing crazy effects in the investment landscape and the global climate?
Sure. Well, first, the piece was written by Jeremy Grantham of GMO, who the shop is in Boston and London. He's just a very smart, long-standing guy who looks at the world with open eyes and is constantly looking for where are opportunities relative to what's going on in reality. And he sees the change in what's happening with the climate as shifting what's going to be scarce and what's going to be valuable in the future. So he's looking at things like farmland and fresh water and fertilizer and things along those lines. It's not Malthusian. It's not, oh my God, we're going to run out of everything. It's really more of a, hey, everything is changing, and those parts of the world that think that they're very fertile, they may be less fertile in future years when it comes to agriculture and other products like that. The second part of your question, why the denial by a large percentage of at least the vocal parts of the country. I don't think most people are denying that climate has changed over the past century. If you think back to the 1950s, there was a pretty big movement by the tobacco companies to deny that smoking caused cancer. And they paid people like John Wayne, who, if memory serves, eventually died of lung cancer, and they would pay doctors to do advertisements. When I smoke Lucky's, the healthiest cigarette. There was no real FDA rules back then. There were none of that. And so there was a concerted effort to protect profits by misleading the public. The technical term for that is agnotology. Willfully distorting, changing, raising doubts about stuff that is not in doubt in order to influence policy. The tobacco companies have done it, and now when you see who's behind the global warming deniers, it's essentially big oil is paying for it. And full disclosure, we own a couple of oil companies. We own SunTrust, and we own Synovus and a handful of others. But the bottom line is that there are people who are getting big profits from the current status quo, and they're very, very reluctant to see anything ultimately change.
Right. So, as a matter of fact, the same front groups, the same PR groups, the same political organizations that were behind the pro-smoking propaganda in the 50s were actually brought in to do the climate change denial today. But okay, Barry Ritholtz, the site is ritholtz.com. That's all the time for we have today. Thanks so much again for being on the Keiser Report.
My pleasure. Thanks for having me, Max. It's always fun talking to you.
All righty. And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Barry Ritholtz. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.